Hi, my name is Grant Mourre. I'm the president and CEO of SPC Nickel Company, a company listed on the TSXV.
Grant, good to see you. It's been over a year, long time.
Yes, it has.
Has been quite a tumultuous market for nickel. It's been on quite the ride. Sort of sitting around sort of $17,000 now. We're hoping for a recovery soon. Can you give me? Do you know what? There's a lot of people who haven't heard from you for a while now. It might be worth kind of giving me a little bit of backdrop into your track record, your history, and why nickel for you.
Well, good questions. So for me, I've been in the exploration game, geologist by trade, for probably 25 years. That time has been focused almost entirely on nickel. And it originated with me moving to Sudbury many years ago to do MSc with Inco at the time. And I've been in Sudbury ever since, working on nickel copper PG projects across North America. And, I just find nickel to be a quite fascinating commodity to explore for. And being in Sudbury you can't pick a better place to be looking for nickel.
Well, it's the right district for sure. In terms of who is there supporting you in terms of actually moving this project forward?
Yeah, we've got a team, very much on the same lines as me, that they're all nickel guys that have a lot of past experience in Sudbury. So either with Vale, Inco, Falconbridge, Glencore, the various big nickel players in North America, and a proven track record of making discoveries. So where team's been responsible for some of the larger discoveries in Sudbury and also some other key nickel discoveries in Canada. But also on the mine building side, we have one of our board members was part of the original FNX Dynatech team that came into Sudbury 20 plus years ago and had just fantastic success taking older Inco projects and putting new capital into them, new energy into them, and turning them into world-class nickel deposits.
Right, okay. So good team. You've actually, maybe it's a week or so, a while now, cracking in a month ago, put out a maiden resource on the West Graham deposit. I think we described it in our weekly show as a good, solid start. I mean, maybe remind people of some of the numbers in the maiden resource.
Yeah, and just to backtrack a bit, a year, well, actually 2 years ago, we signed a option deal with Vale on basically the other half of the West Graham deposit that we didn't own, and that was what we focused our activities on last year, doing the infill drilling that was needed to bring it up to a compliant state, because the property that was part of the deal with Vale hadn't been drilled. Last time it was drilled is in the 50s, late 50s. So we weren't in a position to just take those drill holes and do a new updated resource. So we had to do the infill drilling. We did that, and I think just over 14,000 meters we drilled. And we put the maiden resource out in January of this year. And we are looking at, there's kind of multiple components to this, but the life of mine pit is around 23 million tons at about a 0.55 to 0.6 nickel and copper. It's predominantly a nickel copper system with kind of a 2-to-1 ratio of those two elements. And then outside of that, there's additional resources outside of that pit as well.
Right. So just to understand what I could be investing into, because I always like to understand the company's business plan. You're an explorer, have been. You've got a team of explorers here. Is the intent here to kind of build it up to a certain point and then kind of flip the thing out? Is it? I mean, how do I make money from your business plan?
Yeah, well, that is the big question. Our plan is, we feel that given where we are, that we can transition this project from a resource in the ground to metals coming out of the ground and feeding our neighbors in Sudbury, both Vale and Glencore, that have capacity with mills and smelters. We're uniquely positioned to help support that. And That's our focus. And, we feel like we're going to have to do this in stages, from a pit design, where where we would start with a smaller pit and eventually increase that. But the difference for us is that we can have much lower operating costs and much lower capital costs because we don't have to put the investment in that some other projects might because of the infrastructure that we have.
Right. Let's get into that because it's really, really important. The market is difficult at the moment from most public mining companies. You're a sub $10 million company. It's hard and actually expensive to raise capital at the moment. You've referenced potential model which says, actually, let's try and work out how we get in some near-term revenue. It may not necessarily, I always think those things are not necessarily the most efficient, but they potentially are the smartest way to do that. So you've got two, who did you say, Glencore and someone else? I've got
Vale.
And Vale, right. Are you talking about like DSO contracts where you just, if we can just get our ore into their mills, that'll get some revenue flowing? Is it as simple as that?
Yeah, it'd be a toll milling scenario.
Toll milling, right? Okay.
So they have the capacity, and the idea.
Have they? Like what are they? What capacity are they running at the moment?
Well, I mean, I don't have all the details on that, but I suspect that they are in the 50 to 60% capacity right now.
Okay.
And these are large. This is large infrastructure, so there is space in the existing infrastructure for outside third-party ore.
Right.
And that is what we're targeting. And the concept we kind of look at this pit that we have and say that there's kind of three stages to this. And the first stage would be a small starter pit, which would have, probably in that 1 to 1.5 million ton range. The mineralization is right at surface, so it would have a zero strip ratio, which means you basically everything you bring out of the ground is being trucked directly to a mill. You would do toll milling and contract mining, so significantly reducing capital capex. And when I say that, I mean we're talking in like the sub $10 million, $5 million for capex startup because there's no infrastructure required. You have to upgrade a small road, and that's basically it. So that would be the immediate project to focus on. And we feel like that even at these metal prices, there is some permitting that would have to be done, but I think we start to see an increase in metal prices. That pit makes money at these prices. And that would be generating revenue and cash flow for the company that would now allow us to move to the next stage of the pit, which is really more of an optimized pit where you're now looking at a 10 million ton deposit, which with still a relatively reasonable strip ratio of probably 3 to 1, using the same business model. And that allows you to transition into that. And then your next step would be the life of mine pit, which is the larger, 20 plus million ton resource. So you can see that's the progression that we're looking at. But I think in order to get there, we have to start a little bit smaller and, get the mechanism working, get the process working, start to generate some free cash flow, and put that back into the project to move the project to the next stage.
Understood. Like, and the kind of phased approach in a market like this, I think on paper it sounds really, really good because it's less dilutory. It may not be as efficient, but you'll get there as you go through those phases. Can you give me some sort of sense of what these tolling contracts look like? Because there's that old adage of he controls the mill controls the district, in a sense. Is the power in the hands of the negotiation in the Vale or the Glencores? Can you feel you can make money, but how do you kind of control the kind of margin that you'll be available to you?
Yeah, I mean that is a good question. I think you're right. He who owns the mills in the refining and processing capacity probably holds a lot more of the cards. But I do think that there is a bit of a crunch for additional feed in Sudbury. And if you can deliver that in a timely fashion where we're not talking about 5 years down the road, we're talking about, in the year or in terms of months, that, if you can fill a gap that's needed by these companies, then, we're hopeful that that will result in some more favorable terms for us. And that's what we obviously are in discussions with and will continue to discuss.
Okay. Oh, so you're in discussions. So you're very sure.
But yes. Yeah.
Right. Okay. But you're trying to work out potential, whether they'd want to, and what the potential could be for you. Okay. Fine.
Yeah.
Then the next. Sorry.
Well, I was going to say, what we are doing right now is letting the groups know what we can potentially deliver and in a time frame, and how that fits into their profile. And if it works for them, then that's where we continue to move forward.
Right. Now let's move to the next phase, which is it may be a very low capex. You talked, 5 to 10, because it's like, say, upgrading a road. You'll need some equipment to actually, I guess, dig it out of the ground and stick it onto those and onto trucks, etc. How does the financing of something like that work? So you don't want to go and raise money. Can you get debt financing for that? Can you get contracts from, I don't know, Caterpillar or whoever the heck you're using?
Yeah, I mean, that because that number is much smaller, there's a lot more ways to obtain that, whether it is debt financing, whether it is a partnership, a strategic partnership with a group. There's a lot more ways to find, $5 million to build an asset than there is to find maybe $1 billion to build an asset.
Sure. Good example. But what I'm trying to think of is like, prepay with Vale or Glencore, or, selling onto metal traders who sell it onto. Basically, saying there's a lot of flexibility around it, right?
Yes.
Yeah. Okay. So that's cool. That's kind of interesting again to me, because because I'm thinking as a shareholder, do I get diluted to heck here? Is that what's going to be happening?
The plan would be not to do that. Not to dilute the shareholders to build the initial startup phase of the project.
Right. Okay. So phase one, and you're talking again but potentially they want to hear within months and within the year. Do you think? What do you need to be able to do to be able to say, yeah, we can deliver this potentially within a year?
Well, we have the resource. The next step would be, permitting is obviously the biggest next step for us. But again, we're not permitting in a new area. We're right beside 2 existing mines with closure plans. A lot of that work has been done. You still have to go through it. You still have to get consent from your First Nations and your landowners, but it's a lot easier in Sudbury. So we have to initiate that process. I still suspect that you probably have a year in the permitting and pre-work that needs to be done, metallurgical testing, things like that. But once that's taken care of and you have a closure plan in place, that actual next step of putting something into production, because you don't have to do, you don't have to build a mill, you don't have to build massive infrastructure, can be quite quick. And that's what you would get out of possibly doing a PEA study, is to have that preliminary modeling around that.
Okay, interesting. And that means your market cap is kind of irrelevant at that point. Can you get to that? Can you get to that point from where you are today? I guess what I'm asking. So I don't know what your cash position is. I don't know what your allocation of capital is in terms of exploration, or do you think actually mission critical, number one, let's get this phase one thing delivered. We'll get back onto exploration at a later date. How are you viewing allocating capital?
Ideally, I'd love to be doing exploration drilling, a lot of exploration drilling, because I think there's huge upside potential. But I think priority right now, from talking to the board and management, is to focus on advancing the smaller pit within this asset. And, we're looking at different ways to make that happen right now. And, we're exploring all the options on the table at this point. Okay.
For now, that's how I will view you, as something that's going to look at creating some revenue to kind of as a defense mechanism for yourselves. Because I think it's really tough in markets like this, because I think the name of the game is to, stay in the game, right? it's harder than it's very hard at the moment. So okay, that's our view. So let's go into kind of phase two, if you don't mind. Sort of, let's talk about this maybe 10 million ton option here. What needs to be in place for you to make that decision? Will it need lots more exploration to get, like, I don't know, work on the grade component here?
No, I mean that's within the resource right now. You'd have to do some additional drilling just to move some of the inferred into measured and indicated. But that's not that much of a bigger step. And a lot of your permitting is around the same pit. It's which is a lot, saves a lot of cost. And it's basically would just be a step out of the pit. And, you would have built the infrastructure, the relationships with the other companies in town, and it would just be expansion. Obviously, our resource was based on 950 nickel, 950 nickel. So you do need some higher nickel prices to take to that next step. Really? But the hope is by the time we get to that stage, that's where the prices are. And, we will, because one of the common problems that happens is companies need to wait till the nickel or whatever commodity price gets to the top for them to start developing something. And by the time it's developed, it's back down at the bottom again. And so the thought is, if we can make a go of it with this smaller pit now at these prices, that as we see this growth, that we should be well positioned.
Okay, I get that. Makes sense. So Sudbury's obviously it's a great district for nickel, well known for it as well. Lots of infrastructure around, and I wish you well with that one. Can we talk about Nunavut though? You've got the Muskox project up there as well. Is that just a project too far? Do you spin that out? Do you just park it up for now? I mean, how are you viewing that?
Yeah, I mean, we have said all along that we would like to find a strategic partner for that project. I mean, it is a world-class asset, exploration asset, but, we'd be kidding ourselves if we said that a junior company with a sub $10 million market cap could fund a project up there. And I don't think it'd be fair for our shareholders to do that. So we would like to bring in a strategic partner. There's lots of different forms for that, whether it's a joint venture, or something else to help fund that project. But it is a spectacular nickel copper PG asset up there that has, not just the deposit size potential, but actually a district scale potential. It's that sort of size of a property package that with all the right, from a geology point of view, all the right ticky boxes that you'd like to see in a large kind of nickel district.
So are you speaking to strategics with big balance sheets?
Yeah.
You are?
Yeah.
Okay. What's stopping them?
Well, I would say that, that the discussions were, 6 months ago to at the beginning of the year were, there was a lot of companies interested, and we were talking on a regular basis with companies, and, they've been hit with the downturn in nickel prices like everyone else. Exploration budgets have been cut. But, I think when you start to see closures of nickel mines around the world, in Australia and New Caledonia, that, perhaps that's signaling that we are, bouncing along the bottom, and that we do need to, we will see an increase in price over the coming years, which we hope. That's the time to get back into some of these projects. And so we've ramped up our discussions with groups on this project, and and that's our objective, is to try to find a strategic partner in some form.
Yeah, I guess the danger of these very large projects, the need for a large balance sheet for these very large projects is getting the economics right at the beginning. And I think Wyloo have found that out with Mincor, much to their annoyance. Interesting times out there to see who is going to fund these big projects, where the money is going to come from, how much help you're going to get from government.
Yep.
And I obviously know the Canadian government is actually splashing a bit of cash at the moment for the right companies. Are you able to tap into that at this early stage?
We have been accessing that for our projects, our West Graham project. We've been accessing government funding for exploration drilling, and also for some of the studies we've been doing on ore sorting the project. Nunavut it's not quite there yet. They don't have a critical metal strategy yet at this point, but with the announcement this year about how the de-evolution of Nunavut, how everything is now going back to the people of Nunavut as opposed to the federal government, we think that that's going to be a big positive for activities in Nunavut, because they'll control their destiny, and they'll become more involved and partners in a lot of these projects, we hope. Right.
Okay. So, there's a nice sort of summary catch up after a year of not speaking to you. So appreciate where you're at and appreciate where the market's at. What am I looking at from you this year? What's 2024 hold from me as a shareholder?
So, our activities are going to be focused on West Graham, moving it forwards. There's right now you have to take into consideration the market. Now is not the time to be raising $5 or $10 million, but you do need to keep moving projects forward, and that's what we're going to be doing. We will be getting out doing some additional infill drilling when the snow melts to be able to move the inferred resource into indicated, focusing in on the smaller pit that we have in our plan, and also moving forward with the permitting that's going to be required for us to kind of stay on track. So that'll be what most of the work will be on for West Graham this year. We will also be returning to Muskox for a short field program this year as well.
Okay. Well, Grant, I appreciate the update. Stay in touch as things develop. We're keen to, see how you get on, because as I say, I think it's got potential. You just got to deliver it now.
Yes. Well, thanks for the time.